A very good afternoon to everyone. As we all know that financial reporting is an important tool in the hands of the entity. It contains the vital information about an entity's health. Financial reports are used by the stakeholders to track the performance of an organization and for taking the informed decisions. So with this, I would like to welcome all the participants in today's series of webinar on excellence in financial reporting wherein lessons learned, best practices, and commonly found errors will be taught. Specifically for the sector of municipal body and NPO, we are having today's session. We have amongst us the eminent speakers who are a great source of knowledge. So I would like to welcome CA Ankit Maheshwari sir and CA Kuldeep sir for the today's session. I would like to introduce them. First of all, C. Ankit Maheshwari sir is a highly accomplished and dynamic chartered accountant with an exceptional track record of 15 years of professional experience spanning across various geographies with a strong focus on enhancing financial reporting framework of large listed entities in India. Ankit sir has established himself as an expert in the area of assurance. CA Kuldeep Kothari sir is a fellow member of the Institute of Chartered Accountants of India. He has experience in the field of financial reporting framework and ESG reporting advisory, direct and indirect tax litigation, investment and startup consulting. He is the author of various books and has delivered lectures on topics like financial reporting framework, income tax, GST, investor awareness, and personal finance. So this is a brief about them. I would like to request now both of them, C. Kuldeep Kothari sir and C. Ankit Maheshwari sir, to start with the today's session for all the participants who are waiting eagerly to hear them.
Thank you, Saloni, for a very warm introduction. And let me first place an apology because of some technical glitch. The session was delayed a little. I would first place my sincere thanks to the Chairman Research Committee, CA Dr. Anuj Goel, under whose leadership we have been doing this series of webinar. And this is our sixth session, addressing various sectors. This time, as Saloni rightly mentioned, we are deliberating on the financial reporting practices of NPOs and municipal bodies. And there is a background to this, which I will explain. But let us first, do the formalities. I have along with me CA Kuldeep Kothari ji as my fellow speaker, as a co-worker, as a friend. We have been working together since long and deliberating on all financial reporting practices since a decade together. So it is always a blessing to take a session with him. And then we have again a very eminent resource person, Saloni, with us from the research committee. She's been instrumental in writing up the accounting standards, index, compendiums, preparing the background material. And I feel it's her energetic efforts, which is out of which research committee is able to come out with so many publications. So with this, I think, Saloni, I'll start sharing my screen and we'll give you a background of, as I told you that I'll come up on the background part of it. Is my screen visible?
Yes, sir, it's visible.
Visible, sir.
Now? Saloni, is it visible?
Sir, the screen earlier was visible. Now it is not available.
Okay, just a minute. Now?
Yes, sir, now it's visible.
So the entire background of, hosting these sessions on various sectors starts from the initiative which Institute has taken about giving an annual award on excellence in financial reporting, along with excellence in sustainability reporting also. When institute announces such awards, institute classifies each sector and classify its awards into platinum, silver, and gold category. Right. In all these categories, institute also aims to bifurcate the sector. So, for example, a financial report of uh, a municipal corporation cannot be compared to a financial report of, say, a conglomerate like HUL or like Reliance. That is why these categories are divided. Also, they're not divided from the awards perspective, but the financial framework which is applicable to them. So that is why there is a series of webinars which has been going on. And the bifurcation of sector really comes from the institute's initiative of the award, and the awards are further, when they're bifurcated to sector wise, then they are primarily uh, focused on the financial reporting framework which is applicable in India on all these sectors. So today we are here to deliberate on a very important sector, which is the MPOs and the municipal corporations in India, and what could be a probable excellent financial reporting practices which are applicable in this country. Uh, the idea of the entire presentation is, let us be on both sides of the table. The table on which auditor sits at the table, if you are from a corporate reporting team or a financial reporting team or an accounting team from a municipal corporation or an NPO, then it has to be beneficial for both. So we will not only focus on the financial reporting practices which management prepares, but how as an auditor you should look at those practices is also very critical to make sure that our financial reporting practices are with of high standard, excellent quality, and are benchmarked by global local bodies when we come out with this. With this, I have a very small question too, because we talk about excellence in financial reporting. We talked about quality in financial reporting. I have a very important question to you: is that, do you, people who are attending this webinar, do you understand the quality mechanism which institute has put in place to evaluate excellent financial reporting practices or the quality of the financial reporting which is happening in India? I would want to deliberate, Kuldeepji, that we have four very critical boards which monitors the quality of uh, the financial reporting in India, irrespective of the sectors. They are highly active boards. And before we deliberate on the commonly found errors or the lessons learned, let us understand what these, as a regulator, what they have to say and what is their functioning with respect to the financial reporting practices prevalent in India. So, Kuldeepji, I'm looking for some answers. I want to pose this question to our learned audience: is, which are those four boards? I'm repeating it. Which are those four boards which monitors the quality of financial reporting in India? Kuldeepji and Saloni, if you receive any answer, just let me know.
Yes, sir, we have
Yeah.
received an answer from Delhi. It is Quality Review Board. One answer has been received till yet.
So perfectly said. The answer one is right, but I'm saying we have four boards. Quality Review Board now West with NFRA, NAFRA. Before January 2019, this board was formulated under Section 28 of the Institute only. And the idea of the board was to monitor the quality of the financial reporting practices. However, with NFRA coming up, I think lot of things have been changed with respect to companies adopting financial reporting practices. So yes, true, QRB is there, but now after January 2019, the prerogative is of NFRA on QRB. Can we have other answers too?
Yes, sir, we have received two more boards. That is, one is Peer Review Board of the central government, and another one is FRRB of ICAI.
So answer appears to be correct. Peer review board, I would say, peer review board is a board of institute itself, and it is a non-standing committee of the institute. It is not of central government. It is of our own, ICI falls under the ICI's functions only. Rather, the chairman of research committee is the chairman of the peer review board also in the instant case. And peer review board, the kind of mandate institute has taken with respect to practicing units. I hope everybody is aware that all the listed companies now needs to be audited by a peer review, by a certified peer review practicing unit. Importantly, this mandate came way back in 2010 by SEBI. Institute took this initiative, and everywhere it has been talked about that how this mandate will flow. Initially, Institute decided to take a cutoff date of 1st April 2023, where if you are a five partner or more firm, you are mandatorily required to be undergo a peer review. Now, this date is extended to 31st July, but eventually, if you look at the entire quality mechanism of the institute or the peer review mechanism of the institute, you will realize that in tranches, in phases, that is today a partner firm is required to be peer reviewed. Next year it is a four partner firm. Next year it is a three partner firm. So with this 70-80% of the capacity of the institute will already be peer reviewed. And that is the kind of thrust institute is giving through peer review board on quality of the financial reporting practices. So this is not something new. This is something which has come across. But yes, this board is primarily accountable for maintaining the quality of the financial reporting practices on the auditor's side. Very rightly said, the third board is FRRB, Financial Reporting and Review Board. This board was constituted in July 2002 in 226th council meeting, in which we decided to form this non-standing committee which reviews the financial reporting practices on the company side and the auditor side both. So how FRRB functions, I'll try to explain you. It handpicks data of 10 companies and looks into the financial reporting practices what companies auditors or organization auditors have been adopting. So it looks into both the aspects, the professional standard aspect also and the technical standard aspect also. When you look into FRRB's website, you will get a lot of insight as to what kind of observations are coming. Rather, our session is entirely based on these kind of practices. In the next is, we have tried to highlight the commonly found problems or errors from FRRB. We have tried to reflect it here with respect to compliance of accounting standards of local bodies, or with respect to even compliance of accounting standards or generally acceptable accounting principles in India. And that is why I was giving a lot of thrust on this entire process of quality review. So we are left with last board, and if I can get an answer, so I think the session will come out more interactive. Do we have any answer, Saloni?
Yes, sir. We have received NAFRA, one answer, another answer, Tax Audited Quality Review Board, and one answer, even SEBI.
So SEBI is a regulator, NAFRA is again a regulator, I would say, right? They are all authorities, they are not boards. Also, they do not fall under the prerogative of the institute itself. When we talk about QRB, we talk about NAFRA today. Rather, with NAFRA coming up, you will realize that NAFRA is working on a parallel mechanism or a similar mechanism under which institute is also functioning. So like we have a FRRB, Kuldeep, they have a FRQRB. NAFRA is also handpicking few companies, like we were reviewing the reports of PSP projects or other reports, wherein NAFRA has come out with, advisory evaluating a financial statement of a company and advisory on each applicable accounting standard, how that company has been adopting it. So naturally, they too have a parallel board, which is FRQRB, as of now, the question pertained to the internal mechanism of our institute. But the next answer which we receive is a very correct answer. Whomsoever is has answered is the Tax Audit and Quality Review Board. And this board is also important because here all the external agencies like SEBI, like RBI, like CBDT, like CBIC, all these boards eventually, if they have any issues with the audit quality of the auditor or audit is being done under these regulations or these regulators, then they approach our tax audit and quality review board. And finally, the tax audit and quality review board take the cognizance of the matter which is being put into it and provides recommendation. Last thing, I think, which we need to understand in today's context. So there's an entire paradigm shift, and that is why we are talking about quality mechanisms. That is why we are talking about excellent financial reporting practices. 10 years back, Kuldeep ji, FRRB hardly, handpicked three, four, five companies, very limited companies they were, working about. And whatever the recommendations FRRB or PRB or even QRB used to make, these recommendations were slight in the form of recommendation, not in the form of instructions. Today, when FRRB issues a report, then you will be surprised to know FRRB ki website pe you will find this data that 90% of these companies have been found deficient, and majority of them the cases have gone to disciplinary committees also. So this mechanism was not earlier activated. Similarly, if there's an adverse report in peer review, you have been given a time of 6 months or 12 months to correct the practices of your practicing unit, and if still not corrected, then again these matters are going up to the disciplinary directorate of the institute. Also, one more change, Kuldeep ji, which has come up is no class. All the corporate reporting team sitting here, all the AOs, senior AOs, chief account officers coming from municipal bodies sitting here. This clause is applicable for you also. So, wherein if your municipal body, your corporation, your NPO fails to provide information in which your organization has not applied to any kind of a law, then the applicability of NOCLAR is also coming. However, as of now, NOCLAR is restricted only to listed entities. So, but in phased way, since this comes out from the mandate of International Ethical Standard Board, whatever there is a change in code of ethics has been done on 1st July 2020 is in parlance to what we committed at IFAC. One change we bring was about NOCLAR, and this talks about if non-compliance of any other law and regulation, and a chartered accountant who is in service is also expected to report it to the ICI about any non-compliances which have been happening. Why I am telling all this entire framework? Because I think the objective of the session should not only be able to achieve excellent financial reporting practices, but also understand the kind of risk it poses if we are not able to, comply to the best financial practices. And with NPOs and municipal corporation, I would like to state on table that listed companies, you have NODR guidelines, you have SEBI as a regulator, you have a clear applicability of Ind AS or AS. With NPOs, I think we are still in that transitioning phase. With municipal corporation also, even though we have accounting standards for local bodies, but we are still into the transitioning phase. And today morning only when I was deliberating with Kuldeep ji about this session, I asked him to we were discussing report corporate governance report of an NPO. Surprisingly, we looked at 10 companies, 10 local bodies or 10 municipal corporations, prominent corporations, but unable to furnish a corporate governance report pertaining to the NPO, because when we say corporate governance report or when we say NPO governance report, then sometimes people mistake that they are only applicable to the companies only. So this is not the true case. And with MP and municipal corporation sector, the first thing which we jointly want to bring it on table is that I think the reports itself, the financial reporting itself is incomplete at lot of stages. So we'll try to discuss what should constitute an annual report of a NPO or even at a or municipal corporation. We will bifurcate into various heads. What should come out in each head? Let's try to find it out, and let's try to then focus on the common pitfalls or common problems or common non-compliances or errors which we see while in disclosure or in following the accounting standards or accounting standards for local bodies or even in this in case of uh, section 8 companies, right? All these things will be deliberated, and that is how I would want to set up the agenda for the day. Anything you wish to add, Kuldeep ji, as opening remarks? Else we will.
I think we are running short of time, so we should. You have comprehensively covered everything what we desire to bring on the table during the session. So I think we can start with the session, and later on, as
Okay.
it picks up, we'll pitch.
Okay, fantastic. So next is so we have bifurcated this entire session into two categories. One, the NPO category. The other category is the municipal bodies, because even their financial reporting framework differs from each other. One, two, even the kind of NPO you are, that also defines your financial reporting framework. So we will, for first 30, 40, 50 minutes, let's try to dissect the NPO sector. For next few, the remaining time, we'll try to stick on the local bodies and financial reporting practices of local bodies. Also, with Kuldeep ji here, who is an expert of social audit, I would also want if we can quickly deliberate on social stock exchange in between of the session. So that would be my one request to Kuldeep ji. Uh, I
Sure.
would straight away come to the kind of NPOs we have in India, and we have society as and we have trusts which are public trust, right, under the various state, and then we have Section 8 companies as per the Companies Act 2013. This is there to understand, because for all three, the applicability of accounting framework changes, right? That is why there's a distinction in it. So let's understand what is the basic difference between an accounting framework for a NPO and a normal company or a private limited company, maybe a public limited company. What are the basic differences? Let's try to understand through the broader framework. So one thing is there, that the principles of identification, recognition, measurement all remain same what were there in accounting standards, right? However, what differs is the disclosure and presentation, and that is why there would be a lot of thrust in this section about how do you disclose a particular item of your financial statements, right? Importantly, our technical guide always recommends accounting standards to be followed by NPOs. If there is some guidance note, some advisory coming out, say for example, we have an advisory pertaining to educational institutes, right? Where there's a comprehensive advisory coming up, then that will follow. But that also is in compliance with the accounting standards which institute has issued. So basically, it depends on the type of NPO. The framework will be applicable, right? We still in NPOs we still see a lot of NPOs following cash methods of accounting. However, in phased way, like in municipal corporation, when we see accounting standard for local bodies coming up, and we see the mercantile basis, followed in municipal bodies. So similarly, we will see this the transitioning in MP also to be more prudent in terms of following accounting practices. So
I wish
nothing. Yes, Kuldeep ji.
sorry for interrupting, because I have a point to make here, Ankit, that this is a very common problem in the NPO sector per se, societies, trust, or whether Section 8 companies. They are generally, adopting a hybrid model of presentation of accounting, as and when their convenience or their governing body says they'll switch on to, accrual basis of accounting for a particular type of transaction. On the other side, they will shift to the cash basis of accounting. But with the implication of GST, which is there on many of the training institute or education institutions, or the ones who are running hostels or messes, I think it will be prudent on their part to follow the accrual basis of accounting, as well as it will be convenient for them to comply with the GST provisions also, because there is nothing like cash basis of accounting or provisioning in GST. So over to you,
Correct.
Ankit.
So this is FRRB's recommendation also, which we will
Hmm.
I wanted to take it ahead forward, but very rightly said. I think it's the hybrid model of accounting which makes complex. So your accounting policy, including the revenue recognition policy, Kuldeep ji, I'll tell you, I was looking at a financial report of a local body where the revenue recognition policy still talks about VATs and state taxes.
Hmm.
Now it's a common, we have transitioned to GST, some policy which you have made 10, 15 years back. Still, please go back and check your revenue recognition policy and how you are recording your revenue net of all discounts and everything, and the applicable state taxes is still okay. But if we talk about VAT or sales tax, so we have to now believe that we have transitioned to GST also. So I think rightly said, but these are those basic principles of accounting framework, right? Uh, when you look from the bird's eye view, uh, when you look at from a bird's eye view, or when you look uh, from broadly about how does the financial reporting framework of an NPO should look like, and what all should it constitute broadly. So when you look at your annual reports, please look into these 4 or 5 things. One, let's in your annual report, one thing should come out very well is the legal structure, your organizational structure, as well as your legal composition. To the kind of programs you have been offering, it should also come out well, be it educational, be it health, be it social work. I'll try to, with the next slide, I'll try to align all these things. But when you look broadly, this needs to be taken care. The target groups, right? How do you define your target group? Your geographical presence, right? Most importantly, when institute really evaluates a financial reporting framework, it gives weightages to all these things in terms of excellence in financial reporting award. But most importantly, non-financial information, the trust who have been taking exemptions under Section 11 or who have been exempted under ATG or 1023C, all these trust, while taking those exemptions, clearly states their objectives to the authority. But when it comes about presenting in their annual reports, you will realize that they present it extremely generic. So the objective, your vision, the vision, mission, everything should be very precise, right? Neither it should be too detailed, right? Neither it should be too generic. A precise vision, mission statement, if comes out on the face of the annual report of a NPO or a NGO, I think this could really be impactful. Uh, I would want to, and Kuldeep ji, I might require your help in any
Hmm.
of the point which you feel would
Sure.
be relevant, right? But let's look at the structure of the annual reports of NPOs. And now you go back, we will discuss the financial part because the rest remains to be the financial part only. The thrust which is not given is on the non-financial part of these NPOs. So I am covering the non-financial part. We'll walk through the financial parts also. But let's go back and look whether your annual report has all these things or not, right? So, one, as I told you in the beginning also, is the organizational overview. And as a NPO, you are expected to tell your legal structure. You are expected to tell your overview, who is the chairman of the trust, who are the board of trustees, if it is a trust, if it is the society, who are the members of the society. It should come out very well, along with, if you know, even certain NGOs present how they're functioning and their functions into this entire organization's overview. It should come out well, and that is how your annual report should start. The second is the chairman's statement. And just like a listed company, a NPO is also evaluated, the chairman's statement. What all should constitute a chairman's statement? Let's discuss it. It should talk about the mission, the objectives, the quantum of objectives as a NPO they were able to fulfill. It should talk about, it should not talk about the numbers, right? But the impact it is able to create in terms of, the impact it is able to create on the lives of people. uh, that should also come out as a part of the chairman's statement. More importantly, where the chairman of the trust or this NPO or society feels that after 5 years, where he wants his trust to go, where he wants his NPO to go, how many people he wants to serve, how many people he wants to cater. All these things should come as a part of your chairman's statement. In majority of the cases, we see that the annual report does not have any chairman's statement or the director's report. The next is the management discussion and analysis section. And as rightly, when we will talk about local bodies, there are certain accounting standard for local bodies like budgets. For budgets, you have to come out with MDA section. Whatever you have, just like if you have read an annual report of a company, you will be able to relate to certain things. There we give overview, we give operational highlights, we give financial highlights, and we give the other policies. So here, the thrust is not on the financial highlight, but the operational highlights, the impact you are creating, the diversity, or I would say the segments in which you are operating. Say if you have a educational institution also, and you have a charitable trust also, or you have a healthcare facility also. All these three things in your MDA should come out separately. The budget should come out separately. The operational outlook should also come out separately. Adding few very important things, which lot of NPOs feel that this might not be relevant to us, but is applicable as a part of, or should be formed as a part of MDA, is the risk management framework, is the policy on internal controls, is your human resource policy, is your impact on environment. All these three, four things should come as a part of a management discussion and analysis if you are preparing an annual report of a NPO. Kuldeep, anything to add up?
Me, I just wanted to add one thing, Ankit, because the problem lies here in the mindset of the persons who are handling the accounts or preparing the annual reports. Not to offend anyone, because we basically, being from the not-for-profit sector, we are of the opinion that यार ये चीजें तो not applicable on our trust, our society, or our company. But this is not the case. It is not about excellence in financial reporting. It is about accurate financial reporting. That in any case, if you are preparing an annual report, MDA or a chairman's speech or director's report, you can say the governing body's report, it is the soul of that particular report, because this is the place from where your report starts, the reader of your report. Because there are two type of entities which are there in the market. One is for profit and other is for not for profit. So if you are a not for profit organization, you need to convey your intent, and you need to convey the message clearly to the stakeholders who are bigger round that you are raising. So communicating the things well and communicating in a transparent way are two things which go hand in hand. And for that, MDA or a director's report is a must. And as you have rightly mentioned, that these risk management framework or the budgets or the outlook about the future, these are the things which are a must content or must section of an MDA of any NP or any Section 8 company. Over to you, Ankit.
So next is again a similar issue which comes out. Rather, before I move on the next issue, Kuldeep ji, a commonly found error by FRRB pertain to lot of NPOs or NGOs showing two or three set of activities. For example, if you are an educational institute and you manage a school also and you manage a university also, right? The financial data of both are combined and disclosed. Why I am saying this? Currently, Indian NPOs are at this stage where even we are not bifurcating the data of school or university, even both are allied to the educational objectives of the trust. So I am or we both are talking one step ahead, saying that even in MDA, the outlook of your school or your university or any other thing has to come out separately. And that's something which I wanted to say, that to take a step from here, first bifurcate this at least on the financial side. Times are over where you just have to prepare like a company, a consolidated profit and loss or income and expenditure account, and a consolidated balance sheet of all the segments in which you are operating as an NPO. So that is one thing. The next is a NPO governance report, and as I told in the beginning of the session only. But Kuldeep ji, what would constitute an ideal NPO governance report? If you can help our uh, audience to understand what should come out in an NPO governance report. Everybody know a corporate governance report. So what should be an ideal 4 5 pointers if you can come out?
So, Ankit, basically, NPO governance report is identical in nature when you talk about a corporate governance report. As the intent or the legal constitution of the entity changes, the content of the report will change accordingly. And it is something which is very important for not-for-profit organization. Governance report of a company, say, includes the constitution of various committees like audit committee or CSR committee or remuneration committee and all. It involves giving information about the directors, about the meeting that has taken place, about the board meetings and various other factors. And likewise, when you talk about a NPO governance report, it should talk about the constitution of your governing body. If it is a trust, it should talk about your executive committee. If it is about if it is a society, it should talk about the board of directors, how the board is constituted, how the committee is constituted. If it is a Section 8 company, it should talk about various committees that a trust or society has or the Section 8 company has constituted. Maybe the committees will be of different form. Say if you talk about a normal company, there will be a CSR committee, but there may not be a CSR committee in an NPO. There may be a impact assessment committee, which the duty of which is to work closely on the kind of intervention that the society or the trust or the Section 8 company is doing, and then assessing the actual impact which is being created by the organization. The other example can be of a audit committee. Audit committee is a common one which will be there in a company, a private limited for profit company or a NPO, and along with these various committees, transparency is something which is very important. Through a corporate governance report, like we do in for profit organizations, we convey our message that our organization is transparent organization. We are, we are a diversified organization. For example, if you see that in a limited company or in a listed company, if you see a corporate governance report, you will see a section that will talk about the number of independent directors, the number of women directors which are there, the gender diversity in the board of directors. Likewise, you can mention the same in your NPO governance report, that we have certain amount of women members in the executive committee. We have certain amount of women directors in the board of directors of a Section 8 company. So these are the basic difference. But Ankit, I would like to place the emphasis on the fact that the soul remains the same of in the governance, both in the case of NPOs or the companies. The type of information that we are putting in will change according to the nature and the intent of the organization.
Kuldeep, I have 2-3 questions, coming up on NPO governance. Along with it, there's a question on subscription shown on accrual basis. So I'll first take this question, whether the subscription shown on accrual basis, when not received, be written off, and whether it should form part of any notes to accounts or not. Uh, so I don't know from the name of the person, I'm unable to see. What I want to answer to you is, sir, absolutely right. It is just any other income which you receive as a part of accrued income, but still you have not received, or it had to be written off. Two things are important. One, the accounting treatment which you followed is right. Not necessarily that you put it in your notes to accounts. It depends on the materiality. Let's go on the heading. We say significant notes to accounts and estimates. So if this subscription income is material and you want to bring to the notice of your stakeholder that uh, whether it really impacts the kind of whether it will have a bigger impact on the financials of the trust or any other assumptions of the trust, then definitely this should be a part to notes. What I am trying to make a point here is that in notes, sir, anything which is significant can be constituted, right? Or anything which is prescribed or mandated by an accounting standard needs to be constituted here. So if you have written it off, there is no harm. If it is an immaterial account, no need to take it to the notes to accounts. Another thing, Kuldeep, the next question comes is whether we need to mention the profile of directors in NPO governance report, and whether a non-attendance uh, in a audit committee meeting or the board meetings should be should be disclosed. What is your take on it?
I think if you take the soul of any governance report, the number of board meetings that has taken place or the governing body meetings that has taken place should be disclosed. And if there is any, significant non-attendance, say if they were 6 meetings in a year or 4 meetings in a year, or a few of the members have not attended more than 50% of the meetings, then it has to be there in the report. Because see, what is the logic behind giving a NPO governance report is increasing the trust and the transparency and the confidence of the stakeholders in your trust. Because as the time is progressing, seeking funds for your not-for-profit organization will become difficult, because everybody is looking for transparency, everybody is looking for accountability. So NPO governance report can be a medium through which you can showcase that yes, my organization is accountable, my organization is trustworthy, and I am following the top-notch standards of the corporate governance or the NPO governance per se.
Okay. Okay. The next is I'm coming on the next point.
Yeah.
In case there are any questions pertaining to these points, you are free to ask. We are open to deliberate on each point.
2 questions also, Ankitji. One is from Mr. Banerjee. The important aspect of NPO charitable society is to avail benefit of income tax exemption under Section 11 or Section 10. Nowadays, the registration under Section 12A of the IT Act is either denied or held up by the department, and income tax is imposed on total income. How to ease such denial or how to deal with such case, whether such reporting disclosure will be of some benefit in this area. So I would like to answer this question
Even
on
I would
your
want to
behalf.
answer it. It is a very relevant question.
Yes,
It is
yes.
a question which comes from the pain areas. But you start, then I'll add on.
See, Mr. Banerjee, the issue is that it is an important aspect to avail the benefit of Section 11 or Section 12, or if it is an organization institution, Section 10, 20, 23C. But it is not the sole why the social enterprise is being created. The soul of social enterprise is the primacy of social intent. And if your documentation is up to the mark, see, there may be cases where the exemptions are being denied, or they are being held up with the department base, since it is a system driven process. Yes, certainly these sort of disclosure will help you in getting these registrations or exemptions in a fast track mode, because what the authorities examine is that see, not everybody is right and not everybody is wrong. So when you present your case, or when you upload your the data, like the objects of your society, or the report on various activities that has taken place, if you have any if you have a very good annual report, or a compilation of your annual activities, and including the financial data on year basis, and if you upload the same, I think it will be a very uh, you know uh, important aspect of your society getting an exemption registration with the Income Tax Act. Ankit, you would like to add something to this?
I'll I'll take a minute more than what you took, because it's an important thing. Why do we even prepare an annual report? Let's think about it. We are expected to prepare a financial statement. When we say financial statement, in our case, there are four things which we are expected: the income and expenditure account, the cash flow or the receipts and payment account, right? The balance sheet of the organization and the significant notes to accounts, and the application of income statement if you are a trust which is exempted under Section 12 of the Income Tax Act. Why does somebody even thinks that he or she needs to, or the trust needs to prepare an annual report? So I like Mr. Banerjee's question. The first thing which we both as speakers should deliberate is, why an annual report? Why even an annual report when no framework ask me to do it? Why not both the speakers are only talking about the financial statements and errors found on the financial side? Why non-financial side is also coming up here? I'll tell you the biggest advantage on why anybody prepares an investor, an annual report or an investor presentation. So forget this. Today we have NPOs or NGOs who are, Kuldeepji, even uploading on their website the quarterly, I would say quarterly performances or quarterly impact their NPO or NGOs are creating. The idea is to eventually effectively communicate with the stakeholders, which is the next point also, which are engaged to your NPO. So it is not about like an annual report needs to be presented to all the shareholders, and shareholder इसमें ये देखता है कि how much money I have earned, or what will be my ROI, or how this company is communicating. In trust, in societies, this it is the impact which you are able to create with these reports. This impact will definitely be on your income tax exemptions. This impact will definitely be on your grants, people who have been giving you grants, or the government grants which we are availing. The uh, Even on the revenue side or the receipt side, when you see impactful organizations coming up, like when when an educational institution release a prospectus, or release or the website uploads the kind of activities they've been doing, if you follow such kind of practices, you also command a lot of respect in your peers as well as in the society for which eventually you have incorporated it. So yes, there is a high probability that if it is well aligned annual report, and you submit it with the exemption or the form 56 or whatever is submitted as per the Income Tax Act to claim that exemption, I am sure that this adds up to your point. Also, if such exemptions are withdrawn, and that is a FRRB observation, then how did you created the provision for taxation when such kind of exemptions are not given, withdrawn, withheld, or or uncertain that whether I will be, or whether we will be taking up that exemption or not. So I deliberate with the financial section because we have a specific provisions about applicability of uh, ASLB also at India or and AS22 also. So we will discuss this. But yes, a must think as a NPO who is looking to cater to the larger side of the society should come out with an annual report. We should not. We are in not that era that even that requires any kind of discussion. Kuldeep ji, you had another question.
Yes, there was one question from Mr. Bhandari. That is there any requirement of ESG reporting in NPO and municipal corporations in India?
Mr. Bhandari, so there is a requirement of, as of now, when you look at the sustainability, they talk about the top 100 listed companies. When you look at Amul's website, interestingly, Amul hasn't uploaded their financials, but has uploaded their sustainability report. A sustainability report shows, अभी तो इंडिया में ही पूरी तरीके से applicable नहीं हुआ है, shows the proactiveness of this organization, as well as when institute reviews it as a part of the technical review, there is a weightage if you put up a sustainability report, but not necessarily that you are expected to prepare a sustainability report if you are a municipal corporation. Anything you want to change, Kuldeep ji?
No, I don't want to change anything, but I would like to add a few points in this because, see, when you talk about ESG, it is environment, social, and governance. There are three aspects of an ESG or sustainability report. And as we need to understand that as a not-for-profit sector, we represent that S out of the ESG. So it is us who are the social sector. And for us, when we talk about sustainability report, I think it is not mandated anywhere. But if you want to show the intent and the impact that you have created through your interventions, whether through various type of CSR fundings or grants or donation, it is a must if you are talking about a appropriate annual report or appropriate report of activities of any NPOs, because it will again a reflection of what you are doing through your interventions. Over to you, Ankit.
Kuldeep ji, any other question or should we move ahead?
There was one question in the beginning. It was by Mr. Vinay Kumar Inani. My question is whether my company Mahi Milk Producer Company Limited falls in the category. Kindly clarify whether only Section 25 or Section 8 companies will fall in this category. Our company is working for farmer. So I think your company will fall in this NPO category. I don't have any doubt about it. Any different views, Ankit ji?
Sorry, I missed the question.
He is from a milk producer company. His company's name is Mahi Milk Producer Company Limited. He was asking whether his company will fall under this, NPO and
Yes,
municipal
yes, yes.
corporation
It is
sector.
under the we have Vidya Dairy falling under the same category. So it is under the same category, right? We have Amul also coming under the same category. The next point pertains to the stakeholders information and how do we present the stakeholders information. When I say the stakeholders information, I was talking about in the beginning also the kind of programs and the kind of people you are impacting. They are the stakeholders besides the trustees which have come under the NPO governance report. Here, even the government is a stakeholder. Even the beneficiaries of your trust are the stakeholders. The people you have been impacted are the stakeholders. So all this information needs to be there. Also, how do you disseminate the financial information? When institute evaluates these annual reports, they look into the date of signing of the audit reports, the date of signing of the financials. Rather, in past also, we have been doing such kind of mistakes where an audit report is, you know, earlier uploaded, and then the financial statements are uploaded at the website of the income tax, and people receiving demand of the same kind of things. So importantly, the dates are important. The dates on which you are disseminating these financial information, the way you are disseminating this financial information is extremely important. So up till now, yes, Kuldeep.
One point about the very important, interesting thing that you have mentioned, like uploading of financial statement afterwards or before uploading of the audit report. If you are talking about any company, any society, NGO, Section 8 company who is registered under Section 12A or ATG, they need to, first upload their tax audit report, which is in Form 10,
Absolutely.
10B. And there is a very significant change from this year onwards. They have bifurcated the form into two parts. One is 10B and other is 10BB. If your receipts or if your grants before giving the exemption benefit is more than 2 crores, then you need to upload it in Form 10B. And on other cases, you need to upload it in Form 10BB. So, Ankit, what I faced recently in a practical situation, there was one NGO which we are auditors of. It is running a few hostels in Delhi. So they had their general body meeting on last Friday, and the executive committee was continuously asking me to give the Form 10B, and I was like, the form is not updated on the income
Made
tax
available.
portal, and it is to be filed. It is compulsory to be filed online only. So
Correct.
the disconnect of the difference is that much that they don't understand the difference between an audit report and a tax audit report under Form 10B. So these things are
So
also need to be educated to.
very rightly said.
Hmm.
Also, earlier 10BB was submitted when you were availing
Educational.
1023C
Yes, exactly.
exemption,
You are right.
right? Now this single form has this kind of an impact. You are right
Hmm.
that this audit report needs to go first and then comes the financials. Otherwise, you don't get the exemption, then you find that demand appearing on your income tax portals. So, uh, one more thing, Kuldeep ji, when we have discussed 10B and 10BB, I think the quality of 10Bs and 10BBs we are making, it is extremely. That is why I was telling you there are at least 40-45 cases received by tax audit and collection while wrongly furnishing of a 10B or 10BB for an important trust or a NPO or a municipal body. My point here is that sometimes people don't realize the gravity. Income पूछ रहे हो under section 11 zero डाल दी, application पूछ रहे certain in certain things, just that you don't put up a figure, you put up 0000 at every stage. So I think this is where we have to really deeply understand the form and understand the process of application of income when we are furnishing a 10B or 10BB. A client's exemption is majorly dependent on this audit report. Once this, if there's an erroneous filing, the client eventually starts firing back and starts saying to the auditor that because of the erroneous
Hmm.
furnishing, these demands are huge demands, because then they tax it like a normal demand if the application of the income is not justified. So if you have to really, from auditor side, if something needs to be worked, is these two audit forms in which we should give adequate disclosures. There's a place where you can come out with the disclosures, and additionally whatever you want to furnish, come out and furnish it. Don't hesitate or refrain in furnishing to a government authority.
Can see against the 8 points, 8 pointer report, 8 pointer Form 10B, which was there till last year. There are 49 points which are required to be reported in
My
a new Form 10B and 32 in Form 10BB. So the quantum of, I think the government is also, gearing up for the issues that you have just mentioned, that the quality and the type of Form 10B or 10BB we as a auditor we are executing is not at par. I think it is below par.
okay. I think we can take it forward. So next is the financial statements, the notes to accounts, and how do you eventually present it, and how many references you are using of accounting standards will add a lot of marks if your report is being technically reviewed by the institute. So my request here will be that all those auditors, our managements who are preparing these notes to accounts, please try to refer maximum accounting standards and maximum ASLB in case you are preparing these notes. This adds up to a lot of weightage. I'll discuss when we come on the financial side. Then it is the horizontal and vertical analysis, the periodic analysis, which is a routine affair for a NPO to give. Importantly, Kuldeep ji, I will place my thrust on statement of value added. Can
That is
anybody
good.
tell me? Can anybody tell me how many NPOs are giving this statement of value added? One, if somebody is giving, please write yes in your chat box. Those who are writing yes in their chat box, what constitutes a value added statement? Let's also define it. Because sometimes this statement comes in a tabular format, not addressing the right contributors. So my question to my fellow members, senior members here is, are you giving a value added statement in your as a part of your financial reporting framework? Question number one. If you are giving it, then what constitutes your value added statement? Because again, Kuldeep ji, this is very important. When such things
Important.
are furnished to the authorities, you realize that they are the real impactful NGOs which are creating that kind of an impact. And this value added statement acts as a very important document there. Did we receive any answer of NPOs uh, preparing value adding statements?
Not yet.
Okay, by the time we move on the next slide, right, we have to also talk about the project programs, the cost measure per unit of disbursement in case of NPOs, the administration cost, and the completed programs, the programs which say you decided to make cater 1 lakh people, 10 lakh people, 20 lakh people, how much impact you were able to create also should come out of that program. That we decided by 2040 we will be catering say 10 lakh students or 10 lakh students who are um, coming from not good families or who need some kind of support. How many today you are able to support? All these data should come out. I would suggest that the project programs performances can come out well in the part of companies overview also at the management discussion and analysis section. But since it constitutes certain marks, that is why we are discussing. Any answer on value added statements?
Sir, not received yet.
Okay.
No answers.
So, Kuldeep ji, will you want to add, on value added statements if you can answer to our audience?
If you talk about value added statement, when we talk about a for profit organization, we divide it into a few parts. That what is your contribution to the national exchequer, that is how much tax in form of taxes, how much amount that you are paying, your contribution to your stakeholders, the kind of value of the profit that you are the return that you are earning for your stakeholders, the contribution towards the employees, that is so these are the few parts which are there in a statement of value added. And when you
Correct.
talk about a social organization or a not for profit organization, I think these things can be converted into impact factors, like how many lives that you are impacted, how many children that have been educated because of
Correct.
the interventions that has been done by the society. Stakeholders per se, the employee part will be there also, because to run an organization, whether it is a not for profit or for profit, you need employees. So employee part will be there. The taxes part will not be there, because it will be replaced, I think, with the impact in terms of quantity and the quality of the intervention. but other parts will remain same in a value-added statement by
Importantly, this
NPO.
Kuldeepji, this value-added statement constitutes 6 marks
Hmm.
while your annual reports are being evaluated. So with this, I think we are able to. I hope we are able to throw some light on the structure of the annual reports and structure of an annual reports of a NPO. May you have any questions? Yes, Kuldeepji.
Yes, yes. What numbers are required to be given in a director's report or MDA?
What numbers in a director's report and MDA? So eventually we have to give our operational outlook only. That is one thing. In case of numbers, I think we can come out with the CSR, the total lives which we are impacting. I can give you few illustrations of it. Right. One is the total lives you have been impacting. For example, if you are an educational trust, the total number of students, the growth in number of students, the quantum of benefit you are passing on to each student overall in last 3 5 years. If you can give some kind of a comparative, if you are an educational institution, the bifurcation of your fee structure, that this is your academic fee, this is your tuition fee. So if in case you are a hospital, then the benefits, the number of patients you have been able to serve, uh, how uh, how you are able to eventually eventually what all operational parameters you want to give, the total number of doctors engaged, the total number of nursing staff engaged. Showing it with visual aids would also help you. For example, in 2018 you were a 50 bedded hospital. By 2023, if somebody can see that this is a 200 bedded hospital coming up. For example, if you were engaging 10 doctors, today you are engaging 25 doctors. For example, the patient. So it has to come in a visual aid form. That is one thing. Kuldeep ji, you wanted to say something?
There was one question from a participant. So if you are comfortable, we can take it up or
Only thing is I am trying to make a point in director's report or management discussion and analysis.
related to
Every
that
time,
only.
okay, you just add it. Okay.
So there is a question from Mr. Banerjee that it is very difficult for us to translate the NPO achievements in financial terms, as the object of grants and contribution are towards social upliftment. So basically, Banerjee sir, this is what we are telling here is that you need to showcase the impact that you have created on the lives of the people through the intervention or through the objects of your trust society or Section 8 company. We understand that if you have received a grant for malnutrition of working on malnutrition project of women's or children's or education of women's or children's, it will not be easy or possible for you to quantify the same in terms of financial numbers. But certainly when you start with your object, there must be some baseline study, there must be some target that you have set in, that these are the number of people that I'm going to or I'm willing to serve. And at the end of the project, as a prudent organization, you always assess the impact, that how many people you have served. So it is very easy in impact terms to demonstrate the same in the MDA section or in the director's report, both.
So, so I think Kuldeep ji, so only thing is that one caution to everyone: please don't come out with financial numbers like a normal report, your EBITDAs or something like that, your profit after tax. These are, then you are attracting government to you. So you are a non-profit organization. Everything should be disclosed to an impact. The value you bring to the society should be a part of your MDA. That's all from our side on this front. So, any other question, Kuldeep ji? Else, I would want you to quickly cover the social stock exchange, which I told you in the beginning of the session, and I'll just run through a very forward-looking things which Kuldeep ji wanted to deliberate, and then we come on the financial part of it at the end of the
Sure.
thing, and the municipal corporations also, as to what kind of non-compliances have been seen.
So as we are running short of time, so I will just quickly run through the basic concept of social stock exchange. So before starting with this, a very relatively new sector, I would like to ask, place a question on the table that how many of you are aware of social stock exchange, and if anybody can answer it for me, that what is social stock exchange and how it is going to impact the way the NPOs or the NGOs are working as of now, then it will be a very interactive and interesting thing to deliberate upon. We can wait for 5 to 10 seconds. We can wait for five
Sure,
to ten
sure,
seconds for the
sure.
participants
We
to
can
answer,
let's wait.
because it is something which is very new and very interesting also. Do we have any answers, Saloni?
No, sir, not yet.
Okay, so I'm going ahead with the presentation. Basically, this whole idea of social stock exchange was conceptualized by SEBI and the Finance Ministry in 2018 end itself, and our Finance Minister proposed in July 2019 about creation of a social stock exchange. So when we talk about NPOs or NGOs, I always say whenever I deliberate on this topic, Ankit, that when you talk about social organizations, they are divided by the type of intent or the type of intervention they are doing, but they are united by one common problem, that is funding. There is one common problem. Funding is there in every organization, and when you talk about social sector, the basic purpose of creating an NPO or NGO is to create an impact on the society. But on in day-to-day activities, we indulge so much into raising the funds, managing the funds, that the impact part gets lost somewhere in this process. And SSC, or say social stock exchange, can be a very good medium where the donors or where the persons who are willing to contribute can connect with an organization, with an NPO, NGO, or a Section 8 company, which is transparent, whose reporting practices are benchmarked with the best in the practice, best in the industry, and which is showing the impact that it has created in past through its interventions. So basically, there are two concepts, KG, which is there in the social stock exchange or SSC's whole, idea, which is floated by SEBI or the Finance Ministry. One is primacy of social intent, and second is that what is a social enterprise. So the problem here is that in India, when we see what is a NGO, they are different type of legal constitution in which an NGO can be formed. If anybody is running an hospital through whatever means, he will or it will call it an NGO. If you are running an educational organization, you will call it an NGO. If you are running a trust or society for any other social cause that you are trying to cater, you will call it an NGO. So there was a study which was conducted by Karnataka's social welfare department, when they conducted the study on ground about the number of NGOs which were there. So they found that approximately on an average there were 30,000 NGOs, NKG, 30,000 NGOs per district, which was there registered. Whether functioning or not, that is a separate issue. And when an on-ground study was conducted, the probability or the ratio of active NGOs which came out on front was only 1%. So out of the 30,000 registered, only 300 were found to be functional. And out of those 300, if you put them on the test of a social enterprise, only 30 will qualify. So this is the irony of the system, that we have various organizations who call them NGOs, who are performing like NGOs, but the uniformity in the process, or the uniformity in the type of reporting that they're doing is missing, completely missing. And the basic purpose of creating a social stock exchange is to connect. It is there to bridge the gap between the donor, between the person who is willing to contribute, and the person who is seeking to raise funds. So as of now, two social stock exchanges have already been incorporated by NSE and BSE. though they are the extension of existing stock exchange framework. There is no different market platform that has been created by NSE and BSE, but already the listing process is not started yet. But if you talk about social stock exchange, you can dissect the total process in two parts. One is registration on a social stock exchange, and second is getting your securities listed. That will talk in brief after we talk about registration. So there are 14 NGOs who have already registered on BSE's social stock exchange, and 15 NGOs who have already registered on social stock exchange of NSC, but nobody out of them have put the paper, or if you talk about DRHP for listing of their securities. So it is yet to come in place. There is only one instrument which is being notified by the department as of now, that is ZCZP. It is zero coupon, zero principal bond, in which when you talk about a zero coupon, zero principal bond, it is basically a donation or a grant instrument in which the company will issue a ZCZP for a particular project or for a particular cause or purpose, through which they will list their securities on the social stock exchange, and the donors or the person who are willing to contribute will put in their money through the social stock exchange. The other process remains the same. The timelines, or the way the prospectus is being uploaded and the application is being made by the people, it will be through DMAT only. Rest things remain the same. So very quickly we come on to the 3 layers test, which is there to see whether your organization is fit for listing or your organization is a social enterprise. The layer 1 test is primacy of social intent. So Ankit ji, when you see or when you talk about any social enterprise, it is the intent or it is the object for which they are working. They've already listed 17 to 20 odd basic primary object. These are not an exhaustive list. It is being compiled by the stock exchanges or notified by the SEBI, also covering the United Nations SDGs, the Niti Aayog priority areas also. This is the layer 1 when you see, if you want to list yourself into social stock exchange, the primacy of social intent is required to be checked upon. The layer 2, Ankit ji, can we move on to the next slide?
Sure.
The next slide. The layer 2 is statutory requirement that we have already spoken about in detail. It is like registration of an society, registration act, or as a trust or a section 8 company, the control and ownership, the bylaws or the MOAs and the AOAs of your trust or society or your section 8 company, and the section 12A ATG registration requirement is still there. In my personal opinion, as discussed among the technical group of SEBI also, the section ATG requirement of any NGO or any NPO or any section 8 company to get themselves listed on a social stock exchange will be done away with, because as of now, when you put in your money in ZCZP, zero coupon, zero principal bond, there is no section ATG benefit which is available. I think this will be made in line with the present provision, because though the intent of a donor is to create a social impact or serve the society, but Ankit ji, am I audible to you? Because
Yes.
we have 2 queries from participant that no audio is available. I think I'm audible.
Yes, sir, you
Saloni,
are
am I
audible.
audible?
Even I have, yes, even I have checked from the mobile itself. It's audible.
No,
Okay, thank you.
there is no lag also.
Ankit ji, can you move on to the next slide?
Sure.
So we have already discussed, we were talking about ATG registration certificate. It is going to be done away with, and sooner or later you are not going to have a mandatory requirement that you need a ATG registration certificate to register or list your securities with the social stock exchange. But I have a point here to make, that ZP, that is the only instrument which is available or notified by the SEBI yet for the social stock exchange funding, is not going to serve the purpose, because when you talk about creating a larger impact on the society, it will be there will be alternate investment funds, or there will be organizations or the pool of social enterprises who will be listing their securities, or creating a kind of a mutual fund for social enterprises. So these things will come later on, as and when the concept gets matured in the process. Ankit, can you move on to the next slide?
Sure.
So it is regarding to the fund flow requirement. These limits have been kept in with very detailed and intense discussion, because if you allow anybody to register on stock exchange, it will be a chaos which will be there. Earlier the limit was 2 crores. Now they have reduced the limit to 50 lakh for the average spending in past 3 years. And when you talk about the funding or the kind of grant or donation that you have received, it will be it is average 10 lakh rupees for the past 3 years. Ankit, we can move on to the next slide. The layer third is, I think, Ankit, I want to bring your attention to this particular litmus test of any organization or any social enterprise to be listed on a social stock exchange. It is the 67% benchmark test. So it is crux of what we were talking earlier about presenting a comprehensive annual report, about presenting a management discussion analysis, giving the impact wise detail of their goals and objectives. It talks about that at least 67% of your previous 3 years average spending, or the impact or the beneficiaries, has to be there from one particular cause or intervention. So it is not like that if you're a society or a trust or a section 8 company, you are working for women empowerment, you are working for education of the children, you are working for malnutrition, you are working for menstrual hygiene also, but you have to have 60% impact in terms of revenue, in terms of revenue expenditure, or the customer base or the beneficiaries that you are going to impact from a specific activity. So if you say that you want to get yourself or your society or a section 8 company listed on the social stock exchange, you need to check whether through one object or one intervention which is there, which is mentioned in the SEBI framework also, you have 67% impact. So when we talk about preparing an annual report, preparing a MDA, or preparing a comprehensive financial and non-financial reporting structure, these things will come into play. Because as of now, I don't think that many of the NGOs, there will be a few out of 100 who are preparing this sort of accounting or this sort of reporting internally also for benchmarking or for checking the intervention. Can we move on to the next slide, Ankit? So this is also very important. As of now, SEBI has barred corporate foundations and political and religious or organizations or professional trade organizations. If you talk about example of a corporate foundation, if you talk about say a Reliance Foundation or a Anil Agarwal Foundation, it is a corporate foundation. Primarily, the funds flow to the corporate foundation through their corporate or for-profit entities. Political or religious organization can be any political party. Professional trade associations will be like Sales Tax Bar Association or a Jaipur Sales Tax Bar Association. These are the examples of professional trade association. Infrastructure companies and housing companies are also prohibited from getting themselves listed on the social stock exchange. But if you are an affordable housing company exclusively, then you can list your securities on the social stock exchange. So, so as a social auditor, what is there for us in social stock exchange? There is a concept of social auditor. ICA has been entrusted with an responsibility of creating a SRO, self-regulatory organization, which has already been formed. There is a test which is being conducted by NISM, Ankit. So to make yourself eligible to be a social auditor, you need to pass the test. You can register yourself on NISM website. Then you need to apply to ICA's SRO along with the documents and the passing certificate, and then the membership gets allotted. ICI has ICI has notified the social audit standards also, and they are in process of improvising the same. So this is the whole framework related to the social audit or social auditors or social stock exchange. And in present context, when we talk about preparation of annual report, when we talk about preparation of MDA or a financial or comprehensive non-financial data, if you want, if you foresee that you are going to list your organization in the social stock exchange, these things will play a vital role, because whenever you see there is a requirement in that what we have done in past 3 years. So if you prepare yourself, if you gear up for the future from the present time, then will be a cakewalk for you, or it will be easy selling for you in coming days to register yourself in social stock exchange and raise the funds easily, if you are a transparent and accountable organization, and if you are able to show or demonstrate your impact that you have created on the society in detail. Over to you, Ankit.
I think this was something, phenomenal from your side in last 10, 15 minutes as to, how these all NPOs should look in future and how their accounting framework is so related to themselves giving visibility on these stock exchanges. So thank you so much for a wonderful insight. Even, I was not aware you just asked me to put these slides, but I think made a lot of sense. And I would straight away now come to the financial part of which is left with the session. And that is where, certain people's interest is also there. So, so one uh, certain things which when we prepare the balance sheet of uh, NPO, we go on the sources and application of funds. And there we are expected to come up with, corpus funds, the designated funds, the general funds, the restricted and unrestricted funds. All these funds needs to be separately disclosed. In some NPOs, it has been found that these funds are not separately disclosed. There's a distinction between all these three, four funds, right? Where corpus is an initial capital which has been contributed by the founders or the promoters of the NPO, right? It is not available to distribution. When you say restricted funds, naturally they are those contributions which has restricted use by the contributor himself. Unrestricted is the general fund itself, and designated and earmarked funds are those unrestricted funds which are kept to meet the specific requirements. I'll not take much time on it. I think we discussed on the cash basis and accrual basis of accounting. Only thing which we wanted to come out together is that technical guide always recommends us to use the accrual basis, and what we said in the beginning of the session, that let's not try to maintain the hybrid format of the accounts, right? All the NPOs who are a Section 8 companies or registered under Companies Act 2013 are required to maintain their accounts on accrual basis, including the municipal bodies also when we come on the next part of it, right? So as of now, if you are a Section 8 company and you meet the criteria of India, then you are expected to prepare a financial statement even as per India. Also, Kuldeep, we have a lot of NPOs would not know, but Institute with an effort of Ministry of Corporate Affairs have a India's transitioning facilitation group, which also issued a clarity in their sixth bulletin about, if you are a subsidiary or an associate or a JV of a listed company or a company in which Ind AS is applicable, you are also expected to adopt that Ind AS framework. So being a non-profit company doesn't exempt you, as you were talking in the beginning of the section only, doesn't exempt you for adoption of Ind AS or accounting standard or even section 135 of the Companies Act, which we will be discussing. I'll straight away, come to the common pitfalls which we found and which are being issued by the FRRB as well as internally while evaluating these reports. One is the inadequate or inconsistent disclosure of accounting policy. Other is non-presentation of cash flow statements. Then we were discussing the same point about the clarity wherein we are using GST accounting, and GST accounting is done on mercantile basis wherever few NPOs are doing their accounting on cash basis. So all these things, when we eventually adopt a hybrid model, all these things needs to be taken care. I specifically mentioned about the policies of the revenue recognition as to how do we disclose a revenue recognition policy, how you are mentioning it. Uh, in lot of cases, the contingent liabilities or earmark funds, all these things needs to come in place if you want. These are those common pitfalls which any NPO or NGO would want to, avoid. Uh, Still, I'll just, go on the key considerations. We discussed the governing structure. We discussed, how the government grants. Kuldeep I would want to say all those companies who have been transitioned to India, Section 8 companies, right? They should understand, irrespective they are using receiving a non-monetary grant or they are having a barter transaction. In all these cases, the government grant needs to be disclosed at fair value. If you as an NGO or you as a Section 8 company has transitioned into India's all your fixed assets, all your government grants, the measurement process or remains to be now at the uh, fair value. Importantly, uh, we should also give a thrust on fund accounting. And Kuldeep if you want to discuss something related to fund accounting, will be helpful for us.
Nikki, basically, when we talk about fund accounting, it is like that when you kept funds for different purposes, it is being followed by the educational institutions in majority or the government agencies also. It is the basic reason behind preparing a fund-based account is to keep a track on a particular grant or a particular donation or a particular receipt, that whether it is able to serve the purpose for which it is being received. So see, say if you are an NGO or NPO, you are working in 3-4 areas. You are working on education, you are working on health, you are working on poverty, you are working on animal welfare, and you are raising funds through separate donors for separate purposes. So for that purpose, I think ideally it has to be that purpose wise accounting or a fund wise accounting has to be followed for every different purpose. You need to prepare the accounts and then you need consolidated the same. When you talk about a educational institution, there are student fund, there is education fund, there is a common administration fund. So various type of funds are there. Institutions like colleges or schools or per se colleges or universities in which I have a little bit of experience also, they are funded by UGC or the government or the central government or the state government. So they receive the grants on the basis of the kind of objective they are trying to fulfill. Say they'll receive 50 or 100 odd crores for the student fund. They'll receive 50 or 100 odd crores for the education fund or the administration fund. The purpose of administration fund is to fulfill or to cater the day-to-day requirement of running an institution, whereas the purpose of education fund will be spending related to the education related expenditure or intervention that education society is doing. So this is the basic crux of a fund based accounting. I would like to add one thing to the fair value thing that you have mentioned, Ankit. uh, all NPOs or NGOs or Section 8 companies who are following per se Section 8 company who is following Ind AS or on whom Ind AS is applicable, in all means and purposes you need to follow the Ind AS in letter and spirit. I am giving you a live example. We were discussing a Section 8 company, I cannot name, but Section 8 companies, a transaction they have invested into bonds, Ankit. So when you invest into financial instrument, it is covered under Ind AS 109, that is financial
Correct.
instrument, and
Correct.
there you need to account for that particular instrument on the basis of Ind AS 109. So first of all, there were 2-3 issues. They were not having any specific accounting policies for financial instrument because they used to invest into FDRs, and according to their opinion, FDR was not a financial instrument as per Ind AS 109. The other question which have arisen is that whether I need to value my instrument or whether I need to account for the instrument in accordance with Ind AS 109, like for amortized cost method, because they were holding that particular instrument for solely for the purpose of payment of principal and interest. So it took us 7 days, to form that policy and to clarify that particular transaction for a particular bond. So you can, yourself judge the importance of going through these amendments or keeping yourself updated with indices also, because any non-compliance will attract notice from the authorities. Over to you, Ankit ji.
I think Kuldeep ji, I have one important point to add to all the NPOs and their auditors is designing your accounting policy. We found while evaluating the financial reports, the policy doesn't exist at all. So as a part of your significant notes or as a part of your estimates, it is not coming out well. Like you were talking about this, a similar example pertains to the impairment of the financial assets, which is mentioned
Exactly.
there also. Impairment of the investments, impairment of your, deposits, everything, there has to be a clear-cut policy coming out. How what kind of related party transactions, especially in case of NPOs. This is some India AS18 is something which everybody is looking up to, the related party transactions and all. So making sure that the nature of the transaction comes out well, the quantum of the transaction come out well. There's a separate schedule to your financial statements talking about the applicability of it. The next is if you are, using tax exemptions, how do you account for AS22? As Kuldeep ji was telling previously also about, the treatment of taxation. Also, when we talk about separate accounting of various funds, right? So as I told in the beginning of the session only, that all your activities needs to be separately prepared, not like a segment report, but in even in consolidation. So if you have a university, you will prepare a standalone statement for university. If you have a school, you will prepare a standalone statement for school. If you have a healthcare institution, prepare a standalone statement for it. And then consolidate these three activities. And when you prepare the standalone statements, there you are not expected to give the corpus or anything. The earmark funds or unrestricted, restricted. When you consolidate them, there it is expected. All inter-group transactions, all uh, trust transactions, everything should come out very well. And that's how a good financial reporting framework is prepared. So if I am reporting it for my university, my notes should talk about the transactions which university has done with school, which falls under same trust. So everybody plays trust on the overall accounts preparation of the trust, but try to understand these accounts are separately furnished. As Kuldeep ji was telling, if you are a UGC recognized university, UGC expects you to only furnish the university accounts. If you are a CBSE recognized school, CBSE expects you to furnish the school accounts. And that is why also operationally also it becomes very effective if you are able to furnish all these things. So give some key considerations to it, right? More common pitfalls to discuss. We discussed hybrid method of accounting. We discussed that how the grant is received, applicability of AS12, or the policy of accounting a grant, and how do you disclose. AS specifically talks about it, right? For Section 8 companies, there is no requirement of disclosing EPS. Lot of trust and a lot of Section 8 companies are disclosing EPS. The utilization and movement of reserve needs to be disclosed. Very important disclosure. Uh, any unhedged foreign exposure, any investment out of earmark funds, any commitments which comes as a part of contingent liability, and most importantly, the MSME disclosure should come out well as the payment needs to be made within 45 days if a vendor is a MSME vendor. All these things comprises of a good financial statement of a company, of a NPO. So with non-financial information, I think we have to take care of how we have discussed enough on non-financial information. Only two things which I wanted to add up here. One, The annual report, whatever you are preparing, needs to be published on the website. There has to be a link providing it. It also constitutes an additional marks if you provide links to the annual presentation on your website while you are getting technically reviewed. And your future planning and the impact you are able to create also needs to be there. Last point pertaining to NPOs, and then only we will discuss ASLB, right? Is how you are disclosing the foreign contributions and how you are complying to the FCRA Act, right? So financial statements or your annual report should clearly specify about it. So Kuldeep ji, with this, the NPO part is over. In municipal, we will discuss only because they are related things. We will discuss only the critical pitfalls which we see and the structure of a municipal corporation annual report. Before we, go further on it, I told you about section 135 and whether CSR activities needs to be disclosed or not. Yes, they needs to be disclosed. This is a part of your FAQ. So if you're a section 8 company, please disclose your CSR activities in your annual report. Straight away, I think we have a very limited space left. I'll request Saloni to share the presentation after the session to the audience. Important thing: how do we evaluate a local body report? So all things remains to be same. Only thing is here, instead of the organizational structure, there is an overview which comes out. Right? You are not expected to provide the entire organizational structure of local body, but the overview should come out. Then the government body statement and report is important. There was chairman's report. Rest all remains to be the same, which was there with the uh, local bodies which we discussed. So I'll straight away come to some, the accounting standard for local bodies and the common pitfall while complying to these accounting standards of local bodies. Uh, the first is the presentation of financial statement, and as you know, ASLB one says that the objective is very clear. One, if your financial statements are presented, you need to present a comparable financial statement. Still, Kuldeepji, in some local bodies, in some municipal corporations, the smaller ones especially, we don't find these comparable statement coming up, right? The second is uh, the method of accounting has to be accrual. So what will consist of your financials is a balance sheet, which will also include, please note it here, the statement of change in equity. We did not found their statement of change in equity in lot of organizations, an income and expenditure statement, a cash flow statement, and the notes comprising the significant policies where a budget is publicly available, right? When the approved budget needs to be made publicly available, and also a comparison between the budget and actual has to be furnished as a part of additional financial statement. This is also not coming out very well. Kuldeep ji, anything to add on the presentation part?
We have comprehensively covered. I think we can move on to the further few
The
important.
second is the social benefit part, and no, I have seen very few municipal corporations, including the ones who won the award last time. No offense to anyone, but they even did not have their social benefits, listed down. And how do you list it? So first, let's understand what are social benefits, and they are the specific cash transfers to individuals or the households. Eventually, they are given to address the needs of society as a whole. We have given some examples, right? Importantly, your policy should talk about the measurement of the liability, how you are initially measuring it, how you are subsequently measuring it. Now, the policy should come out, and the measurement should also be based on same only. So for all social benefit schemes, it is the at the best estimate of cost that entity will, is expected to incur and present obligations represented by the liability. Subsequently, any benefit further passed on will be subsequently measured in the next phase. Similarly, you have to measure the expense based on it. The next is the first time adoption, and those municipal corporations adopting for the first time, right, needs to look into what ASLB 33 says. I think we will have now very limited municipal corporations adopting it for the first time, right? So I am not going too much detail into it, but importantly, we discussed about impairment. We should talk about impairment of non-cash generating assets also. And I hope you understand what a non-cash generating asset is. Where you have a CGU, it is easy to impair. The problem here is when this asset is not generating any cash, that means there is no expected inflow which will come out. So in such a case, an impairment is recognized based on the recoverable service amount. So if the asset is not generating any cash, then the impairment is recognized based on the recoverable service amount. Impairment testing of CGUs and non-CGUs. So please make sure that your policies, what you are stating as a part of your financial report, should be in compliance to all these things. Uh,
They need to have sir fixed asset register first to identify the tangible assets
so
in order to impair the same.
so yes, they have their set of challenges. They are old institutions. They are the pillars of the
Agreed.
development of the country, and that is why I feel the older they are, it is very difficult to transition them to the newer methods. Last, I as I already told you, on all MDAs we were discussing management discussion. The MDAs are prepared in accordance with ASLB. ASLB 24 will have a reference, right? The presentation of your budgeted information in financial statement, you can take it as a part to your MDA and separately disclose it. So with this, I think we have enoughly discussed the important part of it. Yes, there are certain pitfalls here also, but commonly remains to be same. All I just wanted to say, Kuldeep ji, is that I think since it is an unregulated sector, that is where the thrust on financial accounting or accounting practices have never been placed upon them. The sector has really come out well. I would appreciate institutes' initiative to, give it a separate category and also evaluate all the separate parameters. But as auditors, as people who are preparing the accounts and financial reports of these municipal corporations and local bodies, let's gear up ourselves for forward-looking practices. Let's gear up ourselves for the best financial reporting practices. Let's try to be more compliant to the framework which institute has suggested. At least let's gather the knowledge of law, barring just saying that this shall not be applicable on us, will not work. All I want to finally conclude with this, that the quality can only come once the desire to improve the quality of your financial statement comes. With this session, the intent was always to build that desire. We are always open to help you, assist you in whatever way you want. Connect us to LinkedIn, whatever platforms or numbers I think Saloni will share. Wherever you face challenges in closing your books, maintaining your books, we are more than happy to help you. Thank you so much for patiently listening. We eventually try to touch on all the areas in bits and pieces to make it a comprehensive presentation. Over to Kuldeep ji.
Thank you, Ankit ji, for such a wonderful deliberation on behalf of all of us, the participants as well as the research committee. To conclude with, I would like to give emphasis on what we have said. There are two aspects how you look at your financial reporting. One is one is for the purpose of, say, complying. You are preparing the financial statement, profit and loss account, income and expenditure, or receipt and payment account, or a fund-based accounting. And the other is actually you mean to excel the way you present. Actually, you mean to embed the trust and the accountability that the people or the stakeholders are willing to see. And with social stock exchange in focus in coming time, I think the trust of all the NPOs, NGOs, or Section 8 company should be on preparing a comprehensive financial as well as non-financial annual report. You may call it as a annual activity report or annual report, but you need to be there. You need to gear up for the future, because there are non-compliances, as Ankit ji has also said about the local bodies, that these are the pillars of the societies and these are the old institutions. I understand that the mindset on the process of the approach is not that, but the intent is there. I can see it from various sources. The intent is there, and we need to put our step forward in process of achieving complete transparency and accountability, and preparing a comprehensive self-speaking annual report which contains the financial and non-financial data both, like we have discussed the management discussion analysis section, the director's report, or the other sections per se. So I would like to thank all the participants for their patience hearing. Research committee, Anuj Goyal sir, and our secretary Dr. Amit Agarwal ji, for giving us an opportunity to interact with all of you, and specifically Saloni, who is coordinating for the first time, and she has done a wonderful job. Over to you, Saloni. You are not
And
audible,
now, okay. Thank you so much, sir. It was a wonderful session to hear. Now, I would like to extend my gratitude towards the chairman and vice chairman of the research committee, Dr. Anuj Goyal, sir, and CA Kotha S. Srinivas, sir. Thereafter, I would like to congratulate Dr. Amit Kumar Agarwal, sir, who have conceptualized this wonderful webinar series. Now, I would place my sincere thanks to both of the speakers for the day, C. Ankit Maheshwari, sir, and C. Kuldeep Kothari, sir. And thank you to all the participants who have joined with us for today's session. Now, I would request you all to even be available for the next session that we will be having on the 21st July on the sector, that is infrastructure and construction sector. So thank you to all once again. So it was happy learning and wonderful to see you all here again.
Thank you. Thank you. Thank you,
Thank you.
everyone. Thanks.
Thank you. Bye.